if there's one mugger on the street who's mean and nasty and smelly and horrible looking, and the other one is polite and nice and clean shaven, and he's still taking your wallet, it doesn't matter. So, and by the way, I'm not just bashing Trump here, Trump fans. I'm in favor of deregulation. I'm in favor of lower taxes. I can't say I'm in favor of everything he's doing.
Welcome to Discourse with Christian. I'm your host, Christian White, and today's guest is Lobo Tiggre, aka Lewis James, who is a seasoned speculator and founder of Lewis James, formerly the lead analyst at Casey Research. He learned resource investing from Doug Casey and many others. Based in Puerto Rico, he combines decades of market insight with a passion for liberty and sound investing. Lobo, thanks so much for being on the show today.
Happy to be with you, Christian.
Would love to start off asking you, what's your current take on the global economy and financial markets?
Well, at the end of last year and at the beginning of the year of the shows, I was telling everybody, the Trump trade for 2025 was volatility. Okay, that didn't take a rocket scientist to figure out. But A, boy, has that worked out in spades. And then B, how do we play that? And one of the things I would tell people is not the VIX. Okay, it spiked over 50 last week, but it took last week's chaos to get it to move off its butt at all. So how do you play volatility? And the important question, going forward now, is it priced in? Where are we at? So the update is it's still volatility. The markets have been breathing a sigh of relief so far this early in this week that things aren't as bad as they feared with the so-called reciprocal tariffs. But not as bad as feared is not good. Okay, if there's one mugger on the street who's mean and nasty and smelly and horrible looking, and the other one is polite and nice and clean shaven, and he's still taking your wallet, it doesn't matter. So, and by the way, I'm not just bashing Trump here, Trump fans. I'm in favor of deregulation. I'm in favor of lower taxes. I can't say I'm in favor of everything he's doing. But I'm gobsmacked that something like Doge could even happen. So don't paint me the wrong colors here if I don't just say everything he does is wonderful. That's not the point. The point is not to beat up Trump. The point is, even if you love Trump, he is an agent of change at the very least, if not an agent of chaos. And we are certainly seeing that in the markets. It's not going away anytime soon. That's a key point here. Volatility is still with us. It has not peaked, I don't think, by any stretch of the imagination. Everybody's thinking, oh, yay, it's just 10% tariffs. Well, that's 10% that wasn't there before. That's an economic cost, right? There's still a whole world of adjustment that has to happen there. And by the way, even if everything else went away entirely, just what's happening with China. If none of the rest of this was happening and it was just the story with China, max 145% tariffs, right? Okay, we got carve-outs, we got exceptions, but even that is kind of not helping that much because, okay, yesterday we had carve-outs, today maybe not. Today we maybe have new tariffs on iPhones or whatever it is. The markets don't like uncertainty. Investors don't like chaos. It's not going away anyway anytime soon. How do we play that? Well, you bet on that. And you can do option strategies. You can sell puts on something that you'd like to buy. There's ways you can do it. But the simplest thing to do is just to make a volatility wish list. There's this great gold company that made this fantastic discovery and I missed it, right? It got away from me before. If we see huge bouts of volatility ahead, that same thing could go on sale, for the price that it was selling at before it made the discovery. These sorts of things happen in the resource sector, or it could be copper, or it could be whatever, you like. The simplest thing in the world to do is simply build cash and wait for volatility to be your friend. And now, Christian, there's a dozen different ways we could go from that intro, but that's really, if nothing else, you remember, don't think that the worst is necessarily behind us.
And I know you mentioned, of course, just now, and you have in the past about having reserves ready to go to be deployed and such. Could you share and dispense perhaps with the audience what your next moves are if A happens or B happens, things of that nature?
Okay. Well, so the big A and B would be market crash or no market crash. Not so much recession or no recession. I think if we start, obviously or undeniably, as I say, going into recession mode, the money helicopters are multiplied, and I just don't think the powers that be will allow us to have a real recession. They will prime the pump, as they like to say, but they will flood the markets with cash. And we've already established that no fault of their own is sufficient enough reason to send people not just a little token $80 gift like Bush sent out, but thousands and thousands of dollars, because it's not their fault. And of course, a recession is nobody's fault. So that's not my big worry right now. My outlook is stagflationary, whether that's reflationary stagflation or somewhere in between, or recessionary stagflation. We'll see. But the crash or no crash question, I think, is live. And if I'm right about the volatility continuing, and if I'm people are breathing this sigh of relief, but what if they're wrong? What if some new idea, some unexpected art of the deal maneuver comes out of Washington, or not from Washington, right? What if Beijing comes up with something that we didn't expect? They're cutting off the supply of rare earths, magnets and things. We expected that. That was already in the playbook. What if they do something we don't expect? So I'm not calling a market crash, Christian. I want to be very clear. I'm not telling everybody, head for the hills, sell everything, the market's going to crash. That's not the takeaway here. But that is a very real possibility. We are in uncharted waters. Scary things are happening. And, at some point, Mr. Market can just say, you know what, I've had enough. I just want out. I want to be out until I see how the dust settles. If that happens, who knows where the bottom is. The alternative, though, is that, sorry, just real quick, we've got the Fed put. People are talking about the Trump put. The very same things that can make Mr. Market nervous and decide to get out could be the same things that, like in 2020, send him off to new highs, right? Oh, bad news. The Powell's going to bring the punch bowl back. So I really don't know which way that's going to go. You're saying A and B. These are the A and B. In either case, I'm going to want cash. And okay, if it takes off, you might say, well, cash is a bad idea. I should be long before it. But you don't know that's going to happen. If it takes off, there will be time to jump on that gravy train. So I think in either case, the volatility play, it's number one is build cash. With that, build your shopping list. And then, I mentioned, my favorite tactic for uncertain times like this is selling puts, because you get paid. You're selling a put, right? So it's an options trade. You're selling the put. So you get paid for selling that put. And if you get filled, you're selling it at a price for something that you'd like to buy anyway. So either you end up long something that you'd like to buy at a good price, or you wouldn't have sold the put, or you get paid and nothing happens. So I think, in terms of, things to do in A and B, those are reasonable strategies when we don't know what's going to happen.
And as it relates to the shopping list that you just brought up, could you kind of unpack that, if you will, as far as perhaps what you're thinking about, what you think others should?
Well, okay. One size doesn't fit all. Personally, I'm very bullish on gold, silver, copper, and uranium for this year. I'm actually long-term bullish on oil and other things. But if we are, if the recession of whatever kind of landing we have comes to pass, oil gets whacked. Uranium, interestingly enough, tends to be recession-proof. So I'm not worried about uranium in this space. By the way, it's April 15, and I just dashed off to the post office to drop something in the mail. So I'm going to break the fourth wall here and mop my brow.
Yeah, no worries.
Sweating about my answers. I've got the air conditioning going, but I'm just going to do it because I can feel that I'm perspiring more than I usually do in an interview. Forgive me, dear audience, but that is the true story. Okay.
Well, that was me earlier too, before hopping on.
It is April 15 as we recorded. By the way, here in Puerto Rico, I one of the joys is not having to file a 1040, but there are still other forms that have to file quarterly stuff, 941s and whatnot. So April 15, I can't ignore it entirely. But if you hate April 15, hey, Puerto Rico still has room here. Anyway, gold, silver, copper, uranium. I'm starting to say that uranium tends to be recession-proof. In 3 out of the 4 recessions, uranium actually went slightly up to up. And the fourth one, that was the 2008 crash, and uranium had already peaked in 2007. So it was already on its way down when that happened. So arguably it had nothing to do with the recession. Gold, silver, you should say, obviously, monetary metals. Copper, you would say, well, like oil, why would you not be bearish on copper? Well, unlike oil, there's no OPEC plus that's been under voluntary supply constraint. There's no threat of a copper glut the way there is right now of an oil glut. And we've got talk of recession and people pulling their guidance, left and right this earnings season on Wall Street because everybody's worried about it. And OPEC, in its infinite wisdom, decides they're going to accelerate their increase of output. Now, maybe they have to for internal reasons. They need the money, or maybe they're trying to just put a KO on the shale producers and flood the market and put their I don't know how that's going to happen, but I do know that I don't want to be buying oil stocks right now going into that situation. Copper's not like that. Copper, I think, is under a protracted and serious supply constraint, and that only gets worse or better for the longs going forward. And it's also just a way to play the inflation that I think does happen. I mentioned the money helicopters before. Trump's agenda is inflationary. That's not an anti-Trump comment. It just is. I mean, this big, beautiful bill they want to pass is trillions and trillions. I mean, moving the debt ceiling like that with the spending cuts are more like aspirational goals over the next 10 years, whereas the spending now plus tax cuts, and I love tax cuts, but that's that's deficit spending on steroids. So that has inflationary consequences, which I think is good for things like copper. They call it Dr. Copper for a reason. It's essential. There's supply constraints. In the very nearest term, yes, I think turmoil is bad for copper. In fact, last fall, when people asked me, I said copper was my top pick for 2025, not gold or uranium or even silver, but copper. But I still haven't gone long yet because of this question, the turmoil that we're seeing in the near term. I think that's going to bring me better buying opportunities. That has started to play out now. Like Santa, I'm checking my list twice and I'm getting ready because I'm very eager to deploy into the copper space. That's an example of where I'm expecting volatility to be my very good friend and get me some excellent entry points. For gold and silver, monetary metals, I probably don't need to tell your audience too much about that. The one caveat is that silver does have an industrial side to it as well. And if I was more worried about copper, other than the very nearest term, that would make me a little bit more hesitant about silver in the near term. But copper's doing well, so if I'm bullish on gold and I'm bullish on copper, how can I not be bullish on silver? And silver on a historical basis is relatively cheaper than gold. So there's more potential alpha in silver than gold under the current circumstances.
As it relates to these topics and such, what are some other things that you feel most people are not talking about or there's not enough conversations on?
Wow, there's a lot of things I could say. The thing that has come up to me recently, though, and this may sound like, squishy pop psychology or whatever, but I truly believe this is important. At times like these are the times that try men's and women's and its souls. But I think there's something really important in that. If you're freaking out over the volatility in your portfolio, maybe you ought to look at yourself, closely. This is the time, look in the mirror and ask yourself, what kind of investor am I? Or what kind of speculator am I? What is my risk tolerance? If you're making, imprudent decisions under duress, let's say, I do think that really is, that could be the gift this market gives you, whether you want it to or not. When I do a workshop at, at PDAC or VRIC or one of these conferences, I often start with, the most important thing for a successful speculator is that ancient dictum, know thyself. Or as our friend Rick Rule likes to say, the typical investor's worst enemy is to the left of their right ear and to the right of their left ear. And times like this really give us an opportunity to have a gut check on this. I'm sorry if that's not the hot stock tip that the audience was hoping for, but I sincerely believe that this could actually be the most valuable thing to come out of this. If you have a come to Jesus moment, as it were, maybe Jesus is telling you something.
And then as it relates to, I know we're mainly focused on, precious metals and things of that nature, for the conversation in your background, and not to deviate too far, but I meant to ask earlier, any geopolitical stuff that you see that might impact, metals, things of that nature?
Okay, well, so there's another 10 different ways we could go with that. Am I expecting the BRICS to launch a gold-backed currency soon? No. This is one of those things. And by the way, I actually think it not only could happen, I think it may even be over the 51% probability thing. Like, I can see that really happening. At some point, of course, they're going to want something beyond the dollar. And none of these countries really trust each other. These are not, historically, brotherly love kind of situations here, particularly the Chinese and the Russians. For them to really trust each other is difficult. Whereas if they have a system where they can mutually verify gold on deposit on either side, right? I'll hold your gold, you'll hold mine, something like that, and we'll back our BRICS currency with that. I can see that actually making sense. But that doesn't mean it's going to happen anytime soon. I've heard, the argument for 10 or 15 years now that, to your question, the geopolitical situation is such, it's the end of the dollar, right? And so it's the time for gold to go back into circulation as money again. So even if that happens, I just see no reason to believe that this is it, it's going to happen now or this year. And I remember, not last year, but the year before, there was was it year before, there was that BRICS summit in South Africa where people were convinced. I had readers writing in to say, what do we do on August 24th when the gold-backed BRICS currency is announced? And I'm like, take it easy. Let's see if it happens, right? So that's just one example where people, geopolitical headlines, they're headlines. They get so exciting. We've got two hot wars in the world right now, Christian, either of which could become World War III. I mean, both of them seem to be over the boiling point, maybe simmering down a little bit, but not really. I mean, the Iran cannot have a nuclear weapon mantra. That is a very hard statement. And if you mean that literally, and in his last interview that I saw, Trump specifically said that includes military options, right, to enforce that mandate, right? This is big stuff. This is scary stuff. But the Middle East has been a basket case for my entire life. Okay, the Ukraine war hasn't been there my entire life, but it's been years, unfortunate years, and it hasn't turned into World War III. So there's a lot of tension out there, any one of which could, blow up, perhaps literally, in a way that changes everything. But you know what? Back in the Cuban Missile Crisis, it didn't happen. Both sides took a step down. I really don't think anybody wants World War III. So take a deep breath. Don't hyperventilate. Relax. Yes, there's scary stuff out there. But, if you put your whole life on hold and move to the cabin in Idaho or something like that and nothing happens, there's a serious opportunity cost to that. So until it's looking not only inevitable or even imminent, but until it starts happening, I would not head to the cabin in Idaho. On the other hand, you kind of said, well, beyond the precious metals, I don't like the term precious metals. They're monetary metals. Gold is money. Beyond that, they're also a store of wealth, and they are a volatility hedge. So, moving to the cabin in Idaho, if nothing happens, can have a very strong opportunity cost. Adding to your gold allocation, if nothing happens, doesn't really it doesn't put you out of business, right? It doesn't rearrange your entire life. It doesn't have your wife asking you why she married you, right? It's a very simple thing to do. This is why we often refer to bullion as insurance, right? In my mind, owning bullion is not a speculation. I don't buy gold because I think it's going to $10,000 or something like that. Or, as Rick Rule says, I own it because I'm afraid it's going to $10,000, right? I hope it doesn't. But if it does, I have that insurance. And this is probably not new to your audience, but maybe it's a reminder that's important to have at times like this, where it seems like crazy times, but you don't have to have a crazy response. There are sane, ordinary things you can do to harden your portfolio, Maybe if you've got the time and the wherewithal, harden your assets. Um, and by that, I don't just mean buy more bullion. I mean internationalize. Have some stored in more than one place, so that if one place goes klepto, you're not SOL. And if you've got the time and wherewithal, you can move beyond that to, real estate and multiple, go like the full Doug Casey formula of having a crib in a half a dozen countries that you like spending time. Ideally, you own a chalet in Switzerland, right? And you own a farm in Argentina like Doug, or you have these things, and they're all places that you're going to spend some time in anyway. And it could work out to a great investment in real estate, but if not, it's something that you would enjoy having anyway. So different levels of response for different folks of different means. But I guess the takeaway, Christian, is that you don't have to go crazy just because times are crazy, but I do think you should take them seriously, and you should do what you can to harden your own life against this chaotic times.
As it relates to your clients and people that you have, that you currently work with and such, what kind of conversations? I mean, obviously, what we're talking about now and such, but are you finding them to be more defensive or more aggressive in certain areas? Could you share perhaps what you can,
Sure.
what those conversations are like?
Yeah, this is actually something I've been thinking about a bit lately with some relief. It is markedly different now from back in my Casey research days. And I want to be diplomatic here. I don't want to throw anybody under the bus or make disparaging statements. But I remember back in my Casey days when there was market swings ups and down, our stocks would go down, and I would get anguished emails from many readers. Oh, what's wrong? Did we make a mistake? Now when the markets are going up, I get congratulatory emails, and when the markets are down or what we're invested in, I get messages like, "Should we buy more? What else can we buy while it's down?" And I, basically, I have no marketing budget. I do these interviews and I do my work, and people find me. I'm known enough in the space that I don't have to promote myself, I guess. And what that seems to do is it seems to attract a certain subset of the investment community out there that doesn't want hyped up promotions. If you order now, I'll send you a Cupid doll and whatever. Um, and so what I'm saying is the answer to your question is the conversations I'm having now, or what I'm hearing from clients now, is tell us more about the opportunities. Tell us more, if things happen the way, what do we want to buy low when, if we have the good fortune to have that opportunity. And, I have a shopping list that I publish for my paid clients on that, in that regard. But it is interesting to me that this is a very different conversation that I had in past decades. There's no panic. And at least personally, I just, that's a much better space to be in. I'd much rather deal with clients looking for opportunities than clients who are angry at me and want to put my head on a pike.
Yeah, I was going to comment. I was having lunch with a financial advisor, just a friend. I'm early 30s for those who aren't aware. He's 30 years older than me, or et cetera. But and he works at one of the big firms and such. And it's always just striking how people just kind of go. I'm trying to word it here diplomatically because you might be listening. but how many people just kind of go with, yeah, this is what the portfolio, or this is what you need to do. And I mean, walking down the street, most people would never even be aware of this dialogue that we're having, and so,
Yeah.
so it's just so striking. There's so many different alternative ways to invest or to go about it. And everyone is just so, I guess, mired in their own day-to-day life. They're not aware.
Yeah, I don't know if this helps our audience very much, but just I'll say very quickly, if I could do a really exciting promotion that would just get all people to sign up left and right, but if it was smarmy, right? If I promised that I knew which stock was going to the moon tomorrow, and when it doesn't, right, I've already got their money, too bad for them, right? I could do that, but then I would just churn over clients, and I'd have to spend a lot of money getting new ones all the time to replace all the people that they get sick and tired of it. I mean, so I literally never have a promotion. There's no year-end sale. There's no birthday sale. it's just the same price, everybody square deal, take it or leave it. And maybe I'm leaving money on the table, but I think I'm also leaving a lot of heartache on the table. I don't want to have to deal with explaining to people and angry people and leaving all the time. Anyway, let's get back to the markets.
Yeah, and as far as Trump goes and his administration, what are some other things that you are kind of keeping tabs on? Maybe it hasn't really been showcased, if you will, but you're just kind of in the background,
Okay. So
keeping an eye on.
maybe we'll annoy some people here, but I'll go ahead and say this, right? So, I mean, you can't just be hooray for our side. And, I am, 110% supportive of Doge. And even if they're doing things wrong, right, it should be surgery, not a sledgehammer and so on. Well, if they went in with a surgical approach, they'd probably still be picking the color of the drapes of the Doge office. Like, that's the way things go in Washington. That's why these things have never made any difference before. This was probably the sort of thing that if it wasn't done with a sledgehammer, it wouldn't have been done at all. So that's great. I'm very supportive of things like that. But the benefits are going to be farther in the future, right? And this happens with deregulation. That's great, but the benefits of the new companies that'll be able to come to the market in the same way, if with the less regulation and, simplifying, getting Doge, getting the government off people's back, all that stuff's great. But the benefits are probably years down the road. Many of them could be long after this Trump administration is over. Notice how I worded that. But the costs are now. If the IRS just lost over 30,000 employees, woo! I can't say I'm shedding a tear over that. But that's 30,000 people that just hit the street looking for a job, or they go on the unemployment rolls and are not going to be spending and so on. So that cost is now. And I'm not saying that's necessarily bad, but I do think that the administration has, I forget which one it was. Was it Hassett? It was one of Trump's minions was in the press yesterday saying there is a recession is not happening this year 100%. Like, what fool goes on national TV to say 100%, future prediction? And sorry, that's just not wise. Like the old knight in the Indiana Jones movie, I don't think he's chosen wisely those words. So what I'm saying is, if you're anti-Trump, you don't need to hear this from me because you're against all this stuff anyway. What I'm trying to say, dear Trump fans, is like, you can't let your love for the ideals and the goals and what's happening blind you to the costs. And especially as an investor, my job isn't to be a cheerleader and tell you what you want to hear. My job is to offer the best guidance I possibly can and help you make money. And if you want to make money, you got to have your eyes open. And you can't just be cheerleading our side, does no wrong, nothing's bad, everything's fine. You will get blindsided if you do that. And so, the Trump agenda is inflationary near term. And it is also recessionary near term. I'm not promising the recession because, as I say, the money helicopters could countervene that. But the harm being done, that's real. And even if it's necessary harm, right? Chemotherapy, for example, the harm that comes from the chemo to kill the cancer cells, that's happening right now. And it was a mistake to ignore the consequences for that. Which brings us back to the beginning of our conversation. This is one of the reasons why I don't think the worst is behind us in the volatility.
Could you perhaps unpack maybe what those cracks might look like as it relates to things getting shaky, getting volatile in nature?
Okay, so we'll see. You're kind of asking me to make predictions, and let's see. What does my magic 8-ball here say? Okay, right. I always have this in case an interviewer asks me for a prediction. But so even it's interesting too, because we just got a low CPI print, right? We got deflation last month, according to the BLS, if you can believe that. So we got a surprise to the downside in CPI. Now, setting aside for the moment that CPI, the CPI, whatever you want to call it, right? Setting aside whatever it measures or doesn't measure, whatever it measures just went down, and that is significant. But that's not The kind of deflation that hard money advocates and free enterprise advocates like me, cheer from the late 1800s was driven by productivity. Such enormous productivity increases, more stuff with less money made for lower prices. That was healthy. Life, the cost of living got cheaper because it was based on a productivity boost. Even if we assume that the numbers from last month were true, which is something I question, we'll see what the revisions have to do. But even if we're saying that's true, it wasn't because of an explosion of productivity last month. It was because of pre-tariff crisis thinking and people, not spending, not buying, not investing in the same ways that produced this enormous change in the metrics. I mean, the Atlanta GDP now, for example, is another case like this. This is not good news. So what do the cracks look like? It should look like recession. But I said that last year, and it didn't happen in a way that you could measure, by negative quarters of GDP. So this is why I'm cautious about saying this. But even if it's not officially a recession, the pain of all those jobs that we didn't lose before, we could see that happen in a big way, and it could happen very suddenly. If it's
I see.
true, sorry, just to put a bow on this, if it's true that we actually did have recessionary conditions in recent years post COVID, the price to be paid for all that lockdown destruction was a recession, and it didn't happen because of all the easy money flowing from Washington and companies not firing people because they were afraid after COVID you couldn't get people, right? So they didn't fire people. Instead, they cut their hours. And we've seen the number of hours work keep coming down, 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 but not the payrolls. You can only do that for so long. If we get to that tipping point where they have to fire people this year, and if Doge helps with that, and if the turmoil we're getting out of the trade, or that you could say that, okay, only 30% of US companies rely on imports. That's 30%. If 30% of the companies in the US are in deep trouble, that's a big problem, right? So, there's potential here for whatever the official definition looks like for a serious hit to the labor market. And I think that the outcome of that, regardless, is inflationary. So the main answer to what does that look like, I think, is stagflation. There are different flavors of that, but that's the takeaway. And as far as investments go, maybe Nvidia is a good idea or whatever. That's not my wheelhouse. In my wheelhouse, real assets are the takeaway. Obviously, monetary metals are a takeaway. And I think after the kerfuffle, I do expect copper to respond to that inflationary impulse because it also has the supply constraints. And I expect uranium to rebound as well. I know there's a lot of hate for uranium out there these days, but actually, that's kind of a buy signal.
I remember you mentioning about the denuclearization on another episode as it relates to uranium, and how that's changed your stance on it because of what Trump has put out there and such. Could you unpack that and perhaps kind of share your thoughts on
Sure.
that?
Well, I want to be very clear about this because I'm not saying that denuclearization will happen again and that there'll be another flood of uranium in the market, which is what happened last time. Right? When the U.S. and the Soviet Union, signed their treaties and started doing the megatons to megawatts program, that resulted in a very large new supply of uranium on the market, and that's what took it down to $7 a pound or something like that. So that's your recency bias. Like that's the only example that we have of something like this in the past. So of course that's a concern. I think the chances of this actually happening are zero. If Putin signed a deal, said that he was going to, denuclearize, I wouldn't believe it. I just flat out see that as a lie and showmanship. I wouldn't believe it for a moment. I don't think the Chinese would sign that deal ever. They're still building out their arsenal. They're still trying to catch up to the Russians and the Americans. And there are already far, far fewer new. I mean, Trump likes to say, "Oh, there's 100 times more than we need." Well, but that's still a much smaller number than it was last time. So we've actually done the math on this. There's a free article on our website. It's called Uranium: A Litmus Test, where we've gone through the math on this. But we think that even if it did happen, the secondary supply would be much more marginal this time. And I don't think it'll happen. But the scare is real, right? People are talking about it, and about every week or so, Trump brings this up again. And so what has changed is not my interest in owning uranium or my plan actually to buy more uranium stocks for my portfolio. It's more affecting my timing, let's say. And I don't claim to be able to time markets. I cannot and will not tell you, oh, this is the bottom. Nobody knows that. But we are still in a downtrend. While the knife is still falling, I think that is a bit early to say, oh, yeah, it's time to catch that puppy. Right? So I would like to see more signs of the market carving out a bottom. I would like to see, Trump shut up about this or move on or try and nothing happens. Basically, I'm more inclined to, again, I don't know where the bottom is, but if the knife is clattered on the floor, it's a better time to pick it up than while it's visibly still falling. But make no mistake, my bullishness on uranium is still extremely strong. The price has already corrected to a level where it no longer incents new supply to come online. High prices have cured high prices already. So, and those new mines that are coming online, they're all behind schedule or over budget. One possible exception, but generally speaking, it's proven, even for the best in the business, it's proven very difficult for them to bring reserves back into production again. So I think this is very, very bullish. That the demand side is just going nuts. Small modular reactors, micro reactors, China, BRICS countries building reactors as fast as they can, and Europe now doing an about face on nuclear energy. These are even heck, 3 Mile Island, like, wow. How much more bullish could you possibly be than to have people seriously talking about bringing 3 Mile Island back online, or that famous reactor from 3 Mile Island? So, yeah, I'm extremely bullish. I just don't want to be a blind bull. There's people who've been burned. Every time I post about uranium, there's some hater who says some snarky thing on X about, oh yeah, you uranium, I lost all this money. Well, they're overlooking the fact that actually since December of 23, January 24, I've been warning about the correction. I was right. And now I'm not just saying, oh, just buy. You can't get hurt catching a falling knife. I'm still being cautious. So I do care about the investment outcomes of the audience. And I don't know the future, but what I'm telling you is what I'm doing with my own money is I'm building cash, and I'm absolutely looking to deploy in the uranium space when I don't know the bottom is in, but at least I can feel reasonably confident it's probably behind me instead of in front of me.
Let's see, is there anything else that you think within, whether it's uranium, gold, silver, copper, et cetera, that you'd like to unpack against something that doesn't receive enough attention?
I guess I can quickly mention, people get all excited about the gold silver ratio, which has gone high again. I have never found that extremes in the gold silver ratio are highly predictive. I mean, it does mean something. Extreme values on any kind of data tend to revert to mean. But that can happen with gold coming down rather than silver going up. And it's always the silver bulls who cite a high gold silver ratio as the reason why you got to buy now, right? And I mean, don't you get tired of seeing these clickbait headlines on YouTube that say silver's going to the moon tomorrow, or something, $500 silver this year, blah, blah, blah. And it never happens, right? So I don't want to be that guy saying those things. That having been said, as I said before, silver is nowhere near even a nominal all-time high, whereas gold's way above it. So yeah, I do see more silver upside in silver. But don't forget, silver lags and it catches up at the end. And it does have its industrial aspect. So the message I'm saying here, and people call me names when I say this and so on. They say I'm a silver bear. I'm not. I'm a silver wolf. Look, I've got silver in my beard and stuff, right? Is don't fall for the hype. Watch for the market data. Look for it to tell you that, the move is on. If you want to accumulate great silver plays, silver bullion, and we talked about bullion, that's savings. I'm not talking bullion, I'm talking stocks. Don't compromise on what makes for a great speculation just because you're an uber silver bull. But yes, in the same way with these other things, I'm looking to make volatility my friend here in silver. I am looking to add silver in my portfolio, because of these things, its industrial side and these other variables that we've got with silver, I'm not in a big rush. It could suffer if copper goes down in the near term, but that would be a great buying opportunity in my view. I'm very, very bullish on silver, and after the volatility settles down, I actually see not just more upside in silver because it's cheaper, but I actually see the industrial side of silver becoming a tailwind that gold does not enjoy. I see it as a win-win in that case, where it benefits from the monetary metal side of inflation, plus it benefits from the industrial demand side. And I do expect outstanding returns in the silver space. I just don't want to be persuaded by these clickbait headlines trying to tell me that it has to be today, by today, right?
I love it. No, same here. I spend a fair amount of time, like I'm sure everyone else does, on YouTube and other platforms, and everyone's trying to leverage their copywriting, right, to get those clicks or get that viewer engagement up. Lobo, how can people learn more about you and get in touch with you?
Well, the very quick pitch is independentspeculator.com. I have a free weekly email newsletter. It's email only. You don't see it online. I can't guarantee you'll agree with everything I say, but I can guarantee that we will not spam you with a flood of daily advertisements. We talked before about how I don't do promotions. There is no sign up by midnight to get the Cupid doll coupon or something, right? It's just always there. If you like my work, maybe you'll hire me as your due diligence guy through my services, my paid services. But if not, the macro commentary there is yours free of charge, and see if you like the way I think.
Very well. Lobo, thanks so much for being on, and looking forward to having you on in the near future.
Thank you, Christian.